Hello everybody, welcome to Street Smart Investing. I'm Albert, and today I'm doing the next 5 on my list. So I have Amalgamated Bank, GATX, FSFG, CCBG, and BY. So let's begin. Let's do Amalgamated Bank. So we have Amalgamated Bank. It's the last 5 days. Let's look at the chart. The max. So it looks like they're breaking even. So it looks like this big buy. So this bank has gone public in the last few years, as you can see right here. It's about to pay a dividend, which is always good news. So let's look at that. Let's look at dividend history from 2018-19. So they have been increasing. So from 2019 to 2020, it was only 2-cent increase, and that was it. Any splits? Oh wow, I don't like that. I do not like that one bit. Let me try. Hold it still. So. The 2020 numbers looks good. So yeah, I'm not too crazy about it. I'm not too crazy about this company. It's just because of that split. The debt is 91%. That's a lot of debt. So like I said, I don't like the bank. I don't like this bank because of the split that they had. So that's definitely a no-no. So jump into the next one. GATX. Let's look at that. GATX. Pretty expensive. The numbers look good. Low turnover, that's good. Looks like it's gone up, then went down in Jan. This is pretty common. It's like in January and February, the start of the year, things have gone down, and then it became like a whole new bull market after March again. So this year has been very, very weird. No, I don't want to even Let's leave it on the RSI. Yeah, let's do that. So as you can see, last 5 days, big drop, heavy buying. Now let's look at some news. Not much news lately. Analysis from analysts. This here's a buy. A lot of selling this past day. Obviously, I saw it in the other category there. Looks like a wedge. Let's look at some numbers here. Let's look at some numbers. Net income, revenues down. Come in third for profitability. Huh. What's their debt? Not bad, 78. That's weird. Come in third for profitability. Oh, this is out of 39 companies, but what category are they under? Oh, no wonder. I don't get it. Hold up. So they raised dividends, that's really good. Splits, no splits, but what category are they under? The global rail car lessor owning fleets in North America. This seems like a railroad. Transportation, what does this have to do with banking? Corporate finance. Let's see what they do. They own rail cars. They lease tank cars, freight cars, locomotives, blah, blah, blah. Also, the fleet is a diverse types of rail cars. They ship commodities and all that. So that explains it. That makes more sense. They do. This is not a bank. I mean, that's what I don't get. It's like it's a good company, but they're not a bank. So this is gonna be under a different category. So moving on. So again, that's a good company especially to put on a watch list. But again, they're not a bank. So I don't know why that was on there. So I'm up to the last three. So the last three I have FSFG, CCBG, and BY. So we're gonna do First Savings Financial, FSFG. Let's look at that. Pretty good stock for the last 5 years, especially for the year it's been going up. Looks good. And I'll tell you this is kind of expensive. It is kind of expensive. Wow. These guys are earning 16. And I know the free float, the amount of shares matter, but again, it's the earnings that plays a big role. Oh wow, there's a lot of selling this past week. Any news? Let's see. No, I don't care about comments. I want to see any news. So now it's a capital plan. That's good. Oh, stock split. I don't like that. I don't like stock splits. It's not good. That is not good. It's not good at all. Okay, that's weird. They don't show no data, but whoa, okay, wow. This is pretty consistent. You see how they raised their dividend? It's like, okay, 2000, let's start with 2013, because 2009 and 12, it was just like a one-time payout. So they went from 2013 to 14, just 1 cent. Following year, 1 cent. Next year, 1 cent. Year after that, 1 cent. Year after that, 1. Then all the way to 2021, 1 cent. But then in June, they doubled it. They doubled. That's insane. You never. This is very rare for a company to do that, to double their dividend payout. That's insane. They've got to be doing really good the last quarter then. And I really don't look at quarterly. But it looks like they've been doing pretty good. %. Sorry about that. So the dividend yield is pretty low. But definitely a bank. First Savings Financial Bank. So for this one, I'm gonna say yes. They're just expensive. They're very expensive. $86 compared to other ones. So let's look at two more. The last two that I have are CCBG and BY. CCBG. So CCBG. There we go. It's pretty cheaper. It's much cheaper. Numbers look good. The share is up because of dividend hike. That's always good news. Hold up. This was 3 days ago, but let me look at the weekly chart then. This says that was a few days ago. Let's look at the weekly chart, then that should be up. I should be up more than that. It's been up only 2.5%. I'm thinking at least 5%. That sucks. Yeah, and they've been selling, obviously. Yeah, that don't make any sense. Dividend hike, but then prices drop. So there's a dividend. Yeah, they're okay. And I don't like how they split. That's not a good sign. That's not a good move. Not at all. So the last one we have is BY. So BY, we have BY. That's not good. So like I said, the last stock was okay. Oh wow, last 5 days has been dropping for BY. But overall, it's been going up. So maybe that's like a good entry point since it's been dropping. So let's see the numbers. Really low dividend yield. Consistent payout. Share has been increasing. Share price has been increasing, sorry. So buying, that's good. That's always a good thing. Always want more buying. Any news? Upgrades and downgrades. Yeah, whatever. Yeah, it's been going up. For the company, let's look at annual. So we dropped in 2020. The income dropped, obviously. Earnings, they still have positive earnings. Debt at 87, not a surprise. Let's look at their dividend list, and then, wow, they haven't been paying that long. No splits, which is good, and they are a bank. So they operate mainly in Chicago. So again, for this stock, Byline Bancorp, they're okay. I wouldn't recommend it. And that's pretty much it. Thank you guys for watching, and I'll see you guys in the next one.